Welcome to Stock Talk with Mike. What a crazy week in the market so far. Hopefully you had a chance to pick up a couple stocks on sale, maybe that were on your watch list or some of your highest conviction holdings while they were trading down. We saw a little bit of a recovery on Wednesday, so that was nice to see, but looked like a real buying opportunity set in as we were just seeing share prices just plummet. But I want to talk to you today about Jumia Technologies and just kind of uncover their earnings report and give you my thoughts on it. And I was really curious to see what kind of response we'd get from the market after this earnings report, given the crazy amount of volatility we've seen in previous reports, and then also going into earnings. So just the last couple of days have been kind of wild for the market and for Jumia. So stay tuned. If you like this kind of video, please consider subscribing to the channel. It'd be great also if you'd like this video. So I didn't buy any additional shares of Jumia during the sell-off on Monday and Tuesday. I'm still pretty happy with my position size in my portfolio, and it just didn't get quite cheap enough where I was interested in picking up more shares. But I did buy some additional shares of Shopify, also of Skills on the cheap, so I was pretty happy with that. And I also picked up some shares of a SPAC with the ticker RAAC, and they're set to merge with a company called Berkshire Grey, which is an AI play in the autonomous robot space, think fulfillment centers kind of thing. And they have a compound annual growth rate of 99%. So pretty interesting company. Chamath is a pipe investor in the company. And I got in around $12.50 a share on Wednesday. So pretty happy with that. If you haven't heard of the company, you definitely want to maybe check that one out. I don't get in a lot of these SPAC plays, but this is one I was interested in. So this is the 5-day chart of Jumia, and actually taking a step back further, they've been trading sideways or down for the last few weeks or so, well off the all-time highs after just being on such a big run. It's not unexpected, especially as we're seeing this now rotation out of some of the high growth tech stocks into some safe plays and financial stocks as well, and reopening trades. This is what I think was very expected. It's actually very healthy what we're seeing in the market, I think. This week. But obviously Jumia has seen some big pressure this week. On Monday it sold off quite heavily, and then on Tuesday fell really hard at the open, recovered fairly nicely throughout the day, but still well off the highs of even last week. And then that was going into reporting earnings on Wednesday morning before the bell. And honestly, I really didn't know what to expect given the fact that they had sold off quite hard the last few earnings reports, even though they beat on earnings per share. So didn't know what to expect given that we had seen such a sell-off already going into the earnings call. But they actually fared quite well, up 6.71%, and trading down a little bit after hours, down 1.89, but actually pretty good results overall, and recovered a lot of the losses from earlier in the week. And that's something to really keep in mind with these earnings reports, is often the price action you see after can have as much to do with the price action heading into the report as it can what the report is itself a lot of times. So if a stock's been on a massive run going into the report, then a lot of those expectations are often baked in. And even though the company reports great numbers, often you'll see some profit taking or a sell-off after reporting earnings. So that's something always to watch. But I think the fact that we had seen this sell-off this week helped subdue any of that with Jumia. And overall, the market seemed pretty happy with the reports. If you haven't already, you might want to check out some of the previous videos I've done on Jumia. I've done a deep dive into the addressable e-commerce market in Africa and the growth drivers for Jumia moving forward. I've also looked at the transition in their business model to more of a real asset-light, lean and mean, third-party selling platform that is moving quickly towards profitability. On their report, commissions and fulfillment is really that focus on third party that we want to see. Commissions were up to 10 million euros on the quarter, which is up 18.6% from Q4 of 2019. And commissions were up 38.5% full year over year. And fulfillment was up to 10.1 euros or 13.6% on the quarter, up 20.7% full year over year. And marketing and advertising, still a relatively small part of their revenue. That was 3 million euros, but that's a 29.9% increase. And they were up 26.6 year over year on marketing and advertising as they work on creating more digital advertising solutions for their customers And value-added services was down to 4.7 euros, which is a decline of 27.3%. And that was largely due to the fact with their logistics service, they're now recording a lot of that revenue under fulfillment. Rather than charging their sellers the shipping fees, that's being passed on to the customers. So that's why you're seeing that number decline. So the full year over year value-added services was down just 7%. But the big one here of why revenues overall are still down, it's this first-party revenue. And this is that shift in the business model I've talked about. But in 2019, we were talking 23 million euros on the quarter in first-party revenue. In Q4 of 2020, that declined to 13.5, which is a 41.4% decline. And that's right in line with what we've seen really for the last few quarters from Jumia with this transition. So they were down 45.6% full year over year in first-party revenue. So now we're gonna have much better comps going into 2021, that's when they've really started to shift away from that first-party revenue. As far as gross profit as well, was 27.9 million euros, or up 12.5% on the quarter, up 22.3% on the full year to 92.8 million euros. Adjusted EBITDA, so that's just your earnings before interest, tax, depreciation, and amortization, their loss was down substantially to 28.3 euros. That's a 47.1% decrease on the quarter. And on the full years, their loss was 119.5 million euros, down 34.6%. So definitely huge cut to their losses there, which is really good. I just want to provide some color on a couple of these potential future growth drivers for Jumia. One is Jumia advertising, still a relatively small portion of their business, but it has the potential of being a really high margin, profitable portion of their business. So 2020 was actually the first full year that they delivered Jumia advertising, and they ran over 1,000 advertising campaigns on behalf of 370 different customers, and some pretty big names in there: Unilever, Nivea, L'Oreal, Huawei, Intel, just to name a few. And Jumia Logistics. So 2020 marked the opening of Jumia Logistics services to third parties. And this is a service that sellers can use whether it's on Jumia Marketplace or not. So it's just a standalone logistics service. So this will really help them deal with the logistical challenges that Jumia is facing to ensure they can actually fulfill orders. So this is going to be a very important part of the business moving forward and help them become really more vertically integrated and sealers of their own fate moving forward. So during the pilot they conducted in 2020, they shipped almost 500,000 packages on behalf of more than 270 clients. So one area of concern that used to be floating around a lot with Jumia a year or more ago, especially with the Citron Research hit piece before they turned 180 and actually started to become buyers of Jumia, was failed deliveries. So they call it the CFDR, which is cancellations, failed deliveries, and returns. They're making big strides, got to be largely due to Jumia Logistics, as well as the shift towards sort of these low-cost goods that they're now shipping as well. But CFDR rate as a percentage of orders improved from 22% in 2019, which is awfully high, right? That's a pretty high failure rate, to 16% in 2020. So that's a significant improvement, and that's a number we're going to want to continue to see trend in the right direction moving forward. So honestly, I think it was a pretty good quarter from Jumia. No real surprises there. It was pretty much in line with what we've seen the last few quarters from Jumia. They've made some great strides towards profitability, and I could see them being profitable here sometime in 2022. I would like to see that top line revenue number move positive again. So not this declining revenue we've seen. I've given them really the benefit of the doubt as they moved away from this first party revenue model. But I think now that we have much better comps in 2021, I expect that to move positive. And in the long, medium term, I really like to see that revenue growth rate get up to 30% or more moving forward. But in Q4 of 2020, they top line revenue still decelerated by 15%, and it was down 13% for the full year. So that's the number I'm going to be watching now. moving away from breaking out this first party versus third party. We have much better comps going in 2021. I expect to see the top line revenue number heading in the right direction now moving forward. I think Jumia is one of those stocks that's really hard to put a price on it as far as what it should be trading at right here today. It's one of those stocks I think you're buying for its future prospects and where it could be in the future. And with those kind of companies, it's really hard to put a price target on in the short term, and they can be incredibly volatile. I wouldn't be surprised if we see Jumia sell off at some point in 2021, even another 20, 30, or 40% at times. I just think the general trajectory over the long term is going to be up. So I stuck it away in a speculative corner of my portfolio, weighted appropriately where I'm comfortable with my position size. And if it goes on a massive run and gets larger, I'll take some profits to keep it appropriately weighted in my portfolio. And that's how I'll manage my risk. And if we see big sell-offs to where I feel like it's underrepresented in my portfolio, I'll look to add. Like I said, in the 30s is kind of that number I'm looking to add more shares of Jumia at this point. But I've been in Jumia for a long time and generally not making a lot of moves, just kind of holding it and kind of waiting for the story to unfold and see how it's going to play out. So thanks for watching. There's been so much going on this week. I feel like there's a lot of stocks to talk about right now. I'll try and get a few more videos out heading into the weekend. In the meantime, happy investing.